Hey, Bulls and Bears, we're back here. My name is JJ. You're watching Bull Boom Bear Bust. Back with another dose of economic reality and a lot more. We're going to have to start expanding out the topics that we talk about here to avoid being too repetitive and redundant, talking about the same topics all the time here. So let's go ahead and get into it today. Of course, everything is still going to focus around the economy, finance, the cost of living, investing, keeping your head above water financially, and talking about what's happening out there in the real world, the places that you may even go to. Like we've got Target right behind me today. I've got an announcement out of Target and a lot more to get into today. We've got a new outbreak to look out for at some of these food grocery stores. We've got Goldman Sachs out there warning about the economy and some shocking and maybe not so shocking prediction on what's happening or where that economy's headed. We've got a war shock warning that the economy could be headed for a war shock. What does that mean? Well, we're going to get into that and a lot more. Let's go ahead and get started right here. And what they're saying here is that America's economy could face a war shock. Now, to some people, they're like, what do you mean? I'm already in shock. Everything costs too much. This is already shocking. Well, if you're already in shock, then brace for it because it could get a lot worse, what's being reported here. And I've said here it's probably just going to get worse before it gets better. Before things get better, we probably need some sort of massive implosion or mass spreading of homelessness. I mean, it's already mass spreading. So what's the word to put on it? Maybe an exponential spike in homelessness, as so many people just can't afford to keep up with the cost of living. They get dragged under the financial wheel. As if a global trade war wasn't enough for businesses and consumers to contend with, it's looking increasingly like the conflict, the recent conflict between Israel and Iran, could reach the brink of a full-blown war. While the conflict is playing out thousands of miles away from U.S. soil, America may not be able to escape the economic impact. By the way, the Fed chair came out today. No rate cuts, but new rate cuts were announced. We got to talk about that. So if the economy was strong, if everything's fine, why are they talking about we may need rate cuts very, very soon? That's what they said. No rate cuts today with this meeting that just went on, but cuts are needed soon. So if you know that cuts are needed soon, why not just cut them now? What's waiting 1, 2, 3 months going to matter, right? If you know rate cuts are going to be needed, why wait? It doesn't make any sense, but that's what he said. But onto this war economy warning here. Quote, what's tended to happen is when there's turmoil in the Middle East, you may see a spike in gas and energy prices, but then it tends to come down. Well, we've seen a pretty big spike over the past few years, even with the conflict over in Europe. Quote, those things don't generally tend to have lasting effects on inflation. That's what he said. Although, of course, in the 70s, they famously did because you had a series of very, very large shocks, unquote. That's what Chairman Powell came out and said. I would beg to differ on that. In the 70s, we had just come off the gold standard in 1971. So we had this new ability to go ahead and just borrow larger amounts of money as a country, as individuals, as consumers, taking out more loans. Banks could be more loose and free to lend out money because they didn't have to have actually anything backing up the money, right? So that's where it started. So obviously he's not going to say that, being the chairman there of the bank. But that's what it was. And now this inflation over the past 5 years, the cost of living hasn't come down. Inflation has slowed down. That's what they don't want to tell you. But I think we all know the cost of living hasn't come down. It's just went up, nowhere but up. Even though inflation has slowed, it just means the cost of living is going up, but just not as fast as it was previously. Right? We all know this, right? But it's amazing that they tiptoe around actually saying these things when they come out and give these speeches and make these announcements. Basically, the long and short of it is expect higher energy prices and higher prices at the pump. Oil prices jumped at just over $78 a barrel following the unprecedented attack, and it's the biggest same-day gain since March of 2022. Wow, the biggest one-day gain in over 3 years. And that was when they first had the conflict begin there between Russia and Ukraine. So expect more rising prices, and that's exactly what I said here. We did see a pretty nice drop over the past few months, but as you probably all expected, as I've said here numerous times, we're just going to see it go back up, right? The powers that be want higher oil prices. They want things to cost more for people, right? So they can make more money too. But they don't want it to be too much. We have widespread people defaulting, right? They don't want it to be that bad, but they want it to be bad enough, but not too bad. You know what I'm saying? They want it to be a constant struggle, but not too bad where everybody they can't meet the cost of living anymore. Then you have a 2020 type of thing where you have to pass all these new laws and new regulations like eviction moratoriums, foreclosure prevention, payment pauses like we saw 5+ years with student loans, things like that, right? So if that happens again, expect a lot more rescue rafts to be thrown out to the people floating in the economy. All right, but the big news today would be, and by the way, it's Thursday, June 19th, leaving the rates unchanged, although it's forecasting higher inflation, right? Does this make any sense to you? Rates left unchanged, but it's forecasting higher inflation. So if you're forecasting higher inflation, why not raise rates? Despite calls for lower interest rates, the bank kept the borrowing costs steady to keep inflation in check. I don't think they should have cut rates at all. I don't think they should have kept them the same. I think they should have raised rates, right? But they don't want it to be harder for people to borrow money, and they don't want it to be harder for the people with existing debt to pay it back. Remember, they don't want massive defaults. They want it to be just hard enough, right? So you have to still beg for handouts, basically. That's what it sounds like to me. I mean, let me know if you disagree or agree with any of this down in comments. But that's kind of the way I look at the whole rate cut / cost of living type of thing. And speaking of rate cuts, we just had 3 countries recently over in the EU, in the European Union, they cut rates, right? So we still see that's the go-to method for people to try to, for countries and leaders to try to kick the can down the road a little bit more. All right, but a few more things I wanted to get into here, and kind of headlines I wanted to talk about. Massive heat wave here, just real quick on this massive heat wave, and this kind of caught my eye. 117 in Phoenix? Wait, real quick here. When I looked at it earlier, it was 117. Now it's apparently dropped 1 degree. 116 degrees in Phoenix, folks. Feels like 120. And the reason I bring this up is because you have a $400,000 plus median home price in Arizona. So you're paying $400,000 plus for a home for 116 degree weather, 117. And it feels like 120 is what they're saying because you have the direct sun versus the shade. Real feel shade, 113 degrees is what they're saying. That's insane, folks. Insane. And it's also spread across the U.S. We're seeing record-setting temperatures in many different states happening. And also, no shock, no surprise, we've got another hurricane coming up, looks like through Mexico. Doubled in strength in the last few days and expected to grow even further. Hurricane Eric on Wednesday chugged through the ideal environment to power up quickly as it approached the southern Pacific coast in Mexico there. Hurricane Eric. I remember when it used to be all female names. Remember that with hurricanes? Then they started putting male names to them. I think maybe back in the early 2000s. I don't know exactly because we had Hurricane Harvey and can't remember the others. But yeah, I guess they figured females are getting a bad rap for being maybe dramatic and causing damage when it's really the males that cause the most damage in society. When you look at all the people that support war, quote unquote leaders that support war, when you look at all the most dangerous like drunk drivers and people causing damage, it's mostly males. So I guess it's fitting that we have male names now for hurricanes. All right, folks, moving on here. I got a chuckle out of this one. This is crazy insane to think about. life on Mars, humans will live in huge space oasis on the red planet in just 15 years. Folks, you know what? Not going to happen. Not going to happen. I remember back in the 90s being told, I think it was a teacher or somebody, being told that by 2020, we're going to have free electricity and all the cars will have solar panels on their roofs, and you won't even have to buy gas because the solar technology is going to advance so much that, of course, that was 20 something years ago, over 20 years ago. But their prediction then was we're going to have such advancements, such massive advancements, that we're just going to have these solar panels on the roofs of our cars. We'll never have to use gas again because the cars are going to be just running off the sun that goes through the solar panel, right? Didn't happen. And this is not going to happen, folks. We're not going to be on the red planet in 15 years in a space oasis. This is a real article. And this was a European Space Agency predicts this to happen here. Imagine a future where humans live in huge space oasis on Mars. We can't even get the cars going without fuel. They're not going to do that. Robots are sent into a vast Martian wilderness where they explore without the risk of exhaustion. Well, first of all, Earth is not uninhabitable yet. Oh, here's going to be a nice place to live. Look at this. Let me just enlarge this. Everybody's dream home here, right? Look at that. You can go out in the garden. And where's the basketball court? That's what I'm looking for. Looks like a nightmare, folks. So unless Earth is completely destroyed, which some people say it will be in 15 years, who the heck would want to go here? Look at that. Inside gardens. There's going to be your spaceship. Nah. No way, folks. I mean, let me know if you disagree with me, but no way that's happening in 15 years. Absolutely not. All right, quick story before we move on to some more, important financial news here, and we're going to talk about Target here in a bit. People are now heisting eggs. We had a whole semi full of eggs that were taken, and 280,000 eggs. Sorry, wrong screen. 280,000 eggs disappeared from a top producer. Basically, they took the whole truck. So they stole the whole freight. Only took the cargo, the man answered. It's valued at $100,000. That's how expensive eggs are right now. Truck full of eggs, $100,000. That's insane. And just to stay on the topic of food here, just for a quick sec.
As a fiduciary, I promise to be the financial
pregnancy
steward
loss,
that
pregnancy
you and your
loss
family
linked to recalled pasta sold at Wal-Mart and Kroger. It seems like all the time these things are coming out, and it seems like they're getting more dangerous all the time, doesn't it?
Charles Schwab is
I mean,
proud
what's
to
next? You eat
support the
something and you just
independent
bloat,
financial
you just
advisors
explode?
who are
Come on,
passionately
death and pregnancy
dedicated to
because
helping people achieve their
this
financial
pasta. I mean,
goals.
what
Visit
in the world is happening at these food processing
findyourindependentadvisor.com.
plants?
Dr. Marty McCalley
Consumers
joins us now.
warned
Is there
to
something wrong with
discard
the
or
inspection
return
system or the
market
testing
side and
system
home
for
chef chicken
this meat
fettuccine
deli meat?
products amid multi-state
there may be
outbreak.
defects there, but it's
So
hard to
be
prevent.
on the
You know,
alert
it's
if you bought pasta recently from Kroger or Wal-Mart. There's been multiple people unalived from this. Fresh Realm, which has production sites in California, Georgia, and Indiana, says chicken fettuccine Alfredo products may be adulterated with an outbreak strain, and it's recalling products that were reduced before June 17th. So be on the alert, be on the lookout for those particular brands at those locations before June 15th. Before June 17th, sorry, that's what it says here. So there you go. Be on the lookout for those. All right, moving on though, folks. Goldman Sachs says the spending plan won't stop the national debt from hitting unsustainable levels. The spending plan won't stop national debt from hitting unsustainable levels. What a weird thing to say, right? Any sort of spending is not going to stop the debt from hitting unsustainable levels. In fact, the debt's already been unsustainable. That's why it just keeps increasing and increasing and increasing. They have to just keep increasing the debt limit. In other words, there is no limit. If you just keep increasing it, there's no debt limit. We've talked about that here before. They've got to keep on increasing it, folks. It's more debt, more spending. Otherwise, the wheels come completely off this economic scheme of just never-ending debt. The never-ending debt wheel is what it is. So, of course, more spending is not going to stop unsustainable debt. I mean, that's the most ridiculous thing ever to even have to say, but they came out and said it. That's Goldman Sachs. So what do you think about that? All right, shifting gears a bit here, folks. Financial stress, or just finances in general, is a huge cause of, I almost said cost. Well, you could say that too. A huge cause of stress. Study finds, check this out. 1 in 3 Americans admit they wake up already exhausted. I think there's a lot of different components to this, but I think the financial, emotional exhaustion from finances is a big part of this. I mean, 1 in 3 say that they're waking up already exhausted. We also have food that's not very nutritious right now. A lot of things in the food making a lot of people unhealthy. 1/3 of Americans aren't waking up well rested. Maybe they're just staying up too late. And I think a lot of people are over-caffeinated. I see people buying coffees at 5, 6, 7 o'clock. Maybe they work the midnight shift, but I don't think so. Being interrupted or talked over is the biggest social energy drain, while lack of quality sleep is the top physical drain, 42%. Americans drink only 5.3 cups of water a day, well below the recommended 8 to 9 cups, despite 56% believing hydration affects energy levels. Actually, I've changed that here recently. I used to have maybe an energy drink, coffee, or something, and then not drink water for like several hours. What I've started doing here, maybe just in the past 6 months, and have you noticed I look better? Do I look healthier? I've started drinking water with whatever I'm drinking. So if it's a 12-ounce, 16-ounce drink of whatever, anything non-water, I'll drink an equal level of water. So 16-ounce cup of coffee means 16-ounce water. 16-ounce drink soda, I usually get the non-sugar kind with sweetened with stevia. 16 ounces of water. Right, balance out whatever you do. Tea, you can kind of get away without doing that, I think, because it's tea. But you know what I mean. So that's interesting that 1 in 3 people are exhausted. I think a big part of it's the nutrition situation. The food's not very nutritive now. Also, dehydration, I think that's a big part. Stress, financial stress, relationship stress, just so many other things, that people are concerned about. And nonstop worry is kind of the society that I see people living in. All right, folks, Target, let's bring it up. Let's talk about it. Target's foot traffic has declined for 4 consecutive months, with May marking the fourth straight month of year-over-year declines in store visits. Right, so you could argue that more people are shopping online, but Walmart's not seeing a big drop in foot visits. All right, it's still packed. This trend follows Target's decision to scale back its diversity and equity program. The decline has been steady, with May's dropping 1.6% year over year. So is it the move away from diversity products, or is it just that people don't have the money to shop at Target, and now they're going to the Dollar Tree and Walmart? The foot traffic was down 1.6% compared to last year. They're talking about comparable sales. In addition to foot traffic, Target's overall comparable sales, which includes both in-store and online sales, fell 3.8%. So you can't just blame it on people online shopping, folks. People are looking for cheaper, not just cheaper, the cheapest. The cheapest. And Walmart's one of the cheapest. I mean, what's cheaper than Walmart? Unless you go to a rummage sale, maybe a secondhand store. And in fact, I went to Goodwill a couple weeks ago, and it seems like some of the stuff in there was more expensive than you could have bought it for new. Crazy some of the prices they're charging there now. And that may be just here in California because they have to pay wages that are, higher here because the cost of living is higher here. So maybe even our Goodwill is priced too high here compared to other states. Another statistic study here to mention, which underpins the financial struggles that so many people are in right now. 43% of struggling households can't afford essentials without credit. It used to be, okay, it was kind of the bigger purchases you would put on a credit card. Some people have always used credit cards just for convenience, and then they'll just pay it off in full each month. especially with trips to the store like that. It's just faster to swipe a card instead of counting out a bunch of bills. Bill and physical money use is at record lows. It just keeps dropping all the time. 43% though can't afford essentials without credit. So essentials basically now groceries. If they didn't have credit, they wouldn't be able to buy them at all. Not just convenient to swipe the card instead of using cash, but they just can't afford it. They can't afford essentials. Financial lifestyles shape credit reliance highlighted a more complex relationship between consumers' economic standing and their engagement with credit products. That's a fancy way of saying that people just don't have the money, folks. I don't think they wanted to come out. They didn't want to come out and sound that brutal, but that's what it is, folks. 44% on groceries, monthly bills, 27% of people, vehicle maintenance, 18%, streaming services. Not because it's convenient to use a card, because they just can't afford it, folks. So that's the bottom line. What do you think about this? The decline in Target, more people going to Walmart. We told you that a few years ago, and that's why I still hold my Walmart stock, even though I think it's overbought. I'm still holding on to it. We said this was going to happen. Multiple episodes we had people were not downsizing. What was the term? It started coming out in the news that people were downsizing from Macy's and Target to like Walmart and the 99-cent store and the Dollar Tree and stuff like that. Family Dollar, that was another big one. People downsizing, scaling down was the word. So maybe you're scaling down. I've scaled down somewhat. I started eating at home more, less restaurant visits, little things here and there. Got rid of a couple streaming services that I used to pay for. So little cuts here, but still doing okay. My previous episode, I talked about I might live in a tent. I'm not that close yet. I mean, if I had to start selling stuff, I could sell my home. And technically, if I sold my home, I'd have almost $800,000. Well, I still have a mortgage, so I shouldn't say that. Not paid off yet. I'm on pace, though, to be paid off in a little under 10 years to have my mortgage paid off. That's pretty good, considering my age, I think. Unless I get a home equity line of credit, which I've never done. But if something happens, an emergency happens, I would probably have to get an emergency home equity line of credit. But without doing that, I'm going to have it paid off in less than 10 years. So that's nice. So not really going to be ending up in a tent because of that. So a little bit of equity. And if I did have to sell my home, I probably would move out of California, even though the family would be mad at me. I would have to move to some place, maybe like Tennessee or something like that, lower cost state, somewhere around Nashville, maybe. I don't know. Let me know about this, folks. Any of this down in the comments. The Target situation, the food outbreak. What else happened here? What did we talk about today? No rate cut today, but they're saying we need rate cuts, even though they're predicting higher inflation. Right? Doesn't make any sense. What's going on with that? Anyways, we're going to wrap it up, folks. As always, keep stacking. Thanks for being here. Bye for now. Peace.